Look, I'm not going to waste your time. We're going to jump right into what I believe is possibly the best opportunity when we look at stocks and options specifically. Because I'm going to tell you right now, there's one thing that I have my eye on, and it's going to stay at the top of my attention for the coming days and possibly next week or two. Also, we need to start discussing what's happening with GDP and why tomorrow PCE, in my opinion, could be the deciding factor in the viewpoint of what's going to be happening with the market and possibly, figuratively, being the nail in the coffin for the Fed, if you will. But of course, before we get to that content, I have to ask you to do two things. Like the video because I'm about to give you unbiased content as always, and consider subscribing, but only subscribe if you get something out of this video, because what do we try to do Monday through Friday? Keep you up to date on the best overall plays in the market, what we're looking at for option traders, the long-term viewpoint of futures and where those are moving, because those set up the fundamentals of trading, and then we're going over the fundamental data points that are being released every single day to hopefully educate you and give you an edge when it comes to trading. This is not financial advice, but do your own due diligence. Let's get to it. Now, before we go crazy and go over the charts, I want to talk about GDP. And this was a little bit hysterical, if you will. We continued on this upward trajectory in the beginning of the day on this terrible GDP report. And this was very concerning to say the least. Economy grew slower than reported pace of 2.7% at the end of 2022, GDP shows, and consumers trimmed spending. Now, giving you the actual data report from Economic Calendar, we got a little bit more information here. And when you come into this, you can see at the morning, we had the expected 2.9%, came out 2.7. GDP price index came in a little bit higher. But overall, GDP is still slowing, less growth. Now, what was the Fed's anticipation? A 2% growth on the course of this year. But it looks like we're on a similar trajectory that we've had for the past year, right? Of downside, downside, downside. And my question is if consumers are slowing down during December and November, the last quarter, which is typically the hot market, if you will, of high spending, what do you think is going to happen when unemployment goes up? What do we think is going to happen? We've already seen it from credit spenders that savings are all-time lows. Banks in the EU are reducing the overall loans they're even allowing because the default rate is spiking. What do we think is going to happen there? Do we think we can maintain above 2%? It's only, hasn't even been quarter number one yet. Interesting. Something to think about. Now, like I told you, there's a play that I'm looking at. There's a play that I'm interested in. And you know what I'm going to do here now? I don't want to waste your time. I want to give you the golden goose, if you will. Now, Amazon, I mentioned this yesterday, and if you're not following on Twitter, I recommend doing so. And I always say follow on Twitter, not because I just love to have followers. We had to restart the account. We're at 3,900. Awesome. If you follow, do whatever you want. I don't care. Yesterday, what did we post about this yesterday? We had massive orders, and typically you don't see this level of buying coming into these orders on equities, something like Amazon, Apple, Tesla, Google. You don't see this level, at least all in one day, right? You might see a big order come in, but usually lackluster and then kind of slows down. But no, we saw some very big orders coming in on Amazon. This was yesterday, right? Yesterday was bigger, and then today we had more of the same. Continued put buying coming in deep in the money plays, okay? Very interesting what we're seeing happening here. Very interesting. Now, Amazon, am I saying this has to go to the rug? Is it a rug pull? Is it getting destroyed? No, I'm not going to say that, but it definitely has my interest, and I've started to add more to my position. Now, giving you a little bit of a visual, showing you what happened here on Amazon, let's talk about it. I posted and showed everyone in Discord, and I posted a little bit of this in the live stream as well every day on this channel, 10:30 a.m. Central. We are live. We did the bear flag, we broke down, went down to 94, tested local lows, actually made new lows, came down to 93.6 and started to bounce with the market. Because what do we expect? If indexes bounce, we expect majority of stocks to bounce. But Amazon gives us this unique opportunity, in my opinion, to reduce risk. What do I mean by that? Even with the market bouncing, Amazon continues to make lower highs. So what do I always say as well? When we're looking at this market, we want to focus on creating opportunity of less risk with higher reward. So if our risk is always minimal, and like this, and I went dated on my positions, I think my inherent risk is around 15 to 17%, where I'm looking to make around 50 to 60% if it goes just to plan. If it becomes more bearish than assumed, it could easily print over that. So that's what I'm looking at now. You can also come down and see some of these gaps. And this also brings me to my next subject, a little bit off subject, and I might be rambling a little bit, but a new thing on TrendSpider, and these are one of the sponsors of the channel, but I never like try to push content on you guys or anyone for y'all to use. But I will say TrendSpider, they just announced something very interesting. It's called the gap detector. So like you apply that right there. You can go in and do whatever you want, but you can come into the daily, and we always love daily gaps, and it will highlight every single gap for you. Okay, it will highlight them, but you need to come in here and adjust some of the settings so you can be very like crystal clear of where those gaps are. So if you come into like the 4 hour, it'll actually show the one that you have down here and then the one that you have further down as well. But you can see it does miss some right there, so I'll have to go in and adjust the settings and tinker with it. It was just announced today, so only reason why I'm showing it to you right now. But you can see really cool. If you have TrendSpider, I would definitely start using it. Really cool. I would just highlight it to see a visual of your chart. But anyways, Amazon daily gap $90, daily gap down at 86. Very interesting for me, something that I'm definitely watching and excited about. Okay, so that's what I'm looking at with Amazon, my favorite play right now. And I love it because the risk aspect of this. Now, jumping into futures, because this is ultimately why you came to the channel, right? What's happening? Now, this was our previous demand zone. Again, if you're on Twitter, then you saw this. And if you were watching the daily videos, then of course you saw this also. Now, with Twitter, I'm able to show that so you guys can save that for yourself. And as you see here, you invalidated because you became below that level, right? So when you come below the demand, that is invalidated. So theoretically, we have to get rid of that. That's where we annihilated it. We're down below it. Now, I want to bring the indicators back up really quick, and I want to get rid of the gap detector so you can't see it just really quickly. We're going to go to the daily 200 SMA. That's what we're looking at. These are our targets across the board. And for anyone asking, 100%, that is what I'm watching. Okay, nothing else, right? We have gone through every demand. We are just dropping at this point. We're getting a little bit of a bounce, and I believe we're getting a bounce. Personally, this is my opinion, okay? I try to be as honest with you and tell you my unbiased viewpoint of the market every day here on the channel, right? Even if it gets scrutiny, I don't care. That's the point of option drops, is to help you. And above all else, to be truthful to you, so you can come to the channel and be like, at least Tyler's giving me his honest opinion. I'm just trying to hype me up. I believe today was a trap. Personally, I believe, especially from lunch to the end of the day, is setting up for a nasty trap. Tomorrow is our PCE data. We got a little bit of a predecessor of some of this information coming in here. You saw your PCE prices come out higher than expected. It's not showing the expected move, but I think it was at about 3.3. It came out 3.7, so higher than expected. So tomorrow you will, and then your core PCE prices, 3.9, came out 4.3. Now, does this mean that PCE needs to beat tomorrow? Will be. No, I'm just looking for any type of signal to give me a little bit of a nudge in the right direction. So tomorrow at 8:30, you have your PCE. And again, I am not saying this for myself. I am repeating what the Fed has told us. PCE is the most important aspect or data pool that tells us about inflation. That is Fed Pal's words, not Tyler Wilson's, Fed Pal. Okay, so go Google it, whatever you need to do, verify. And again, I recommend that you kind of distrust anyone you watch on the internet. You need to do your own DD. Don't just blindly watch a YouTube video and take a trade based on that. It's ridiculous. And if you do that, honestly, you kind of deserve to lose money. But when you jump in there, PCE tomorrow morning, I think it's going to have a massive impact. Very important. What have we seen so far? PPI went above expectations. CPI above expectations. We're seeing the tone of the Fed switching also. So I think tomorrow, very critical for the market. I also think it's very interesting that we started to see a lot of buying pressure coming into PCE after all this other data has missed. Do we find it? Is it a coincidence? I don't know. But in my opinion, it's setting up for a nasty move tomorrow. My opinion. But if PCE beats, you will push up, and my thesis will be totally wrong, and I'll come on here and say I was wrong, right? So that's what I'm looking at there. Now, coming down here, it's important to realize we have some very big levels. This is the 4-hour time frame, but I'm looking at the 200 SMA, your moving average on the 200 day, right? So on Nasdaq, 11.95 roughly. On ES futures, the S&P 500, SPX, right? You're looking down to 39.49, 39.50. In my opinion, that has to be our clear-cut target. I don't imagine what else it could be. That's the level. And if you want to see how big of a level this has been, just go look in the past. I've gone over it so many times. After that, obviously, we're going to start going to our weekly levels, all the way down here at 3,700 here, specifically on ES, and then Nasdaq's a little bit closer, around 11.6. Those are our really monster levels to be watching. But again, I believe these are the levels you need to be watching specifically right now. You've come down below a lot of our key levels, and something to be watching right now is, are we going to make a lower high now? And that's the question that everyone's kind of wondering here. And what do I mean? We've made these lower highs here, and I meant lower low. I'm so sorry. You want to see if you're going to make a lower low below 11.8. And that's where the whole trend flips, in my opinion. That's where volume kicks in at that point. You start to see sellers get more aggressive after they establish that lower low. So that's what I'm looking for. And that only will take place after you break the 200 SMA. So that's why these levels are so important of what we've been watching and what we've been tracking. Make sure you understand that. Now today, what I will say, even with my belief of this being a trap, correct, right? What I said, right? I'm going to refresh this so you get a better look at volume. It's a little bit more. You're at roughly 91. You'll probably be around 93, 94 by the end of after hours, if I'm correct, right? So that's what I'm anticipating. And you had decent volume on the day. I do want to say that. You had good volume. Now, this volume, though, I will say, as we look at Bookmap, it makes sense. You saw it from both sides of the market, right? So typically over the past 4 or 5 weeks, we saw the push up, and what was happening? All the volume was coming from buyers. And then on the push down, over the past few days, all the volumes come from sellers. Now, when we look at Bookmap, we see something that we haven't seen in a while, right? So again, I try to use Bookmap because what it basically does is give you a visual on the level 2 data. Okay, I always say this, but some people like me, I'm a visual guy. I need to see it, right? I don't like just looking at the numbers on the ticks on level 2 and scrolling through. That can be difficult. And sometimes you're going to miss some of those orders. And the link is down below if you want to check them out. I don't really care. But as we look here, you're obviously dropping down aggressive selling. But we saw something a little bit different today. We saw the aggressive selling, but sellers also setting up walls. So we saw that push up this morning, and then in after hours or pre-market, right? Very aggressive, no walls set, anything like that. Market opens up, you come up to this level around 40.30, get slapped, and sellers take control from there. Aggressive market buying on SPX and ES, in my opinion, to the downside, right? Shorting that market, right? Just aggressive all day long, basically into lunchtime, where you start to consolidate sideways near lows. And then honestly, near the end of the day, you start pushing back up. But the interesting aspect here is how easy it was for them to push up here, right? Very interesting, right? We saw shorts establish positions, and then we saw the push back up, and they just it was almost the same speed. We've gone over the path of least resistance over the past few days, and both of these moves were very quick and very sudden. That's the interesting part here, is when we look at what's happening. Now, I will say ES still looks relatively weak, in my opinion. You are making another lower high here, something to be looking at in the after hours right now. But as we look here, you still saw some aggression here. So we saw heavy and violent selling this morning from sellers. And then this morning, in the end of the day, we saw aggressive buying. So we definitely can see that when we look at the volume on the day. It makes sense at where SPY came in. What do we always look for? That we always look for, and I always talk about, we look for volume to be the predecessor or the big indicator when it comes to the overall market movement, right? That's going to tell us about pivots, right? A lot of the pivots, we see a big spike in volume before we get our move, either back to the upside or back to the downside. Today was a very interesting day, and I personally believe that tomorrow will be a better volume day, maybe even just close to 90 million. That's what I'm looking at right now. Your 30-day average is around 78, I believe. It has been dropping, but it's probably rising over the past 4 days. So something to consider, something to look at. I'm anticipating higher volume tomorrow because I believe, again, I'm going to say it again. What did we want to see to flip bearish on the market? Bad data. Data gives you your answers. Data is what the Fed is tracking. Data is all they care about right now. They don't care about unemployment. They'll give you nonsense sayings about what's happening with unemployment and expectations and this and that. And then they came to the point and said, well, unemployment really isn't bad. It's not really that bad because it's helping the economy stay strong. And I'm just like, what are we talking about? You say one day it needs to go down or it needs to go up, and then the next day it can stay down, right? You're not getting a clear answer. So when we look at this, I'm going to tell you right now, data is your clear clear answer. And as we see CPI rise, as we see PPI rise, as you see what's happening in China, what's happening in every other country, as we witness what happened in Australia and the resurgence of their inflation, I'm telling you, PCE is the end all be all. And just to give you a little hint of what's really happening here, Jamie Dimon goes on CNBC, CEO of JP Morgan, and he says there's still a chance for a soft landing. But what people are leaving out, all these news sources, is that he followed this statement up by saying we may have lost a bit of control on inflation. That was his statement. Do we understand how crazy this sounds? That there's a chance for a soft landing, but we may have lost control of inflation. Our government, the people who are in charge of our monetary policy, have lost control. Do we understand the level of distress that's happening in the market right now? That's why I'm telling you tomorrow PCE is the most important day they're probably going to have over the next few weeks. PCE will reign supreme over the next few weeks. Understand that, know that, be ready for it. That's my opinion right now. Now, again, going into the end of the day, I want to look at a few contracts that we had going on here with SPY. As we see here, highest orders of the day, pretty mixed. We saw a lot of aggression yesterday. QQQ, again, downside, a lot of downside playing happening here. Okay. What's the interesting part about Qs? Nasdaq has been the leader on the push up. We've already shown what happens when Nasdaq can lead. When Nasdaq leads, we get the best movement. We get the best upside. Equities move more than when the S&P 500 leads or the Dow leads, correct? We understand this. Now you're seeing the shift come from Qs, a lot of heavy selling. What I will say is we had one really big order come in on SPX. This is for December 15th. Most likely a hedge for all the selling that's coming in. Personal opinion, attack me. I don't know. That's my personal opinion there. And high possibility that these do turn green after a while. I'm going to tell you that right now. Again, my personal opinion, if we just do the math there, very, very likely that they're already green right now. Again, understand that, take it for a grain of salt, understand, but that's my viewpoint today. We saw a lot of that aggressive selling come in yesterday going into GDP, and I don't believe we saw that exit the market today. I believe today with GDP was confirmation for those positions. Again, a few little plays at the end of the day that I'm liking still. Now, we saw NVIDIA's earnings, and I was wrong. I'm going to say that right now. I was wrong about NVIDIA's earnings. Was I really wrong? Their earnings weren't good. they slightly beat the revised earnings, but they ended up pushing up. And if we look here on like the daily chart, you can still see on the daily levels that you're above that key level 227, 228, 227. Now on NVIDIA, if you get back below 228, 227, it's a short 100%. You play the gap fill all the way back down to like 214, down to 211. Okay. If it gets below 228, above there, you can't short it. You have to either play the long. That's my opinion, okay? But if it gets below 228, it's a clear-cut short for me. Now, what I'm doing is I still have some of my AMD position. Now, AMD, what's happened here? If we look at the daily chart, you are trying to bounce on the, I actually didn't see this, on the 200 weekly SMA. And again, I think this is a great experience for you guys as well, to understand that I too missed things. I missed the 200 SMA here. Now I have been trimming a lot of my position, like I told everyone in Discord and told people to the live stream. Overall, I've probably traded the 75s from March 17th. I had about 50 of the contracts over the past 3 days, and I've ended yesterday with 10 of them, right? Because I just constantly been trimming, getting in, getting out, getting in, getting out, right? It was easy money, just chopping it up. Now, I still am in the opinion here that I am bearish on AMD. When we look at the reaction from NVIDIA and other semiconductors, right? I think AMD, it just doesn't have the same strength, okay? Also here, you are clearly making lower high, lower high, lower high, lower high, and lower lows. Obviously though, what you wanna see is a push back down and to get under the 200 SMA on the weekly and the daily, okay? And giving you a little bit of a visual of that daily level, I wanted to show you really quick right here. Right about 78.5, 78.7, that's where that level is. So getting below that, it's a clear-cut short in my opinion. That's where you can enter it with some confirmation, okay? That's my opinion there. Now, the last thing I'm gonna mention is gonna be Costco. I think this is a little bit of a riskier play, but Costco has been interesting. And if we look at Costco, the last thing I'm gonna talk about here in this video, when Costco gets below, we have to go to the 4-hour chart just so you can see here. When Costco gets below the daily 200 SMA, something good always happens. Now I'm going to show you over the past, we'll do the past year, Okay. Going back to last May, you broke below the 200 SMA. You dropped from 508 down to lows of 406. Massive drop. Okay. Maybe it's a fluke. You break here, come back up, break down. When you break down, you go from 520 all the way to lows of 450. Maybe it's a fluke. Maybe, who knows? Fast forward to December, right? You break below 515. We can even say that you got in a little bit late, maybe the next day, 497. You go from 497 all the way down to 448, another 50-point drop. Well, what are you doing now? You've already tested the 200 SMA, bounced up, and you're actually trending below it, getting rejected on the 4-hour daily time frame, right? I'm just saying, do what you will, watch what you need to watch. Under the 200 SMA here at 495, 496 roughly, I have to be skeptical. What have we also said here about XLY, XLP? Home Depot, Target, Walmart, Costco. They have all been one of the first to react to negative inflation numbers because they're business to consumer and they're trying to take some of the hit so it alleviates the pain for their consumer so they can actually build a better relationship and retain their customers. That's the name of the game when it comes to retail. And that's what's happening here. So like Costco, watch it, be careful. PC tomorrow. I'll see you later. Have a good one. Like, subscribe, unsubscribe if you have to. Really, I don't even care.